Hey, how's it going, people? Welcome, welcome, welcome to Financial Sins. What a blessing to have you. My name is Anthony Murray, and I'm your host. Now, if you don't know, let me just school you in a little bit. We did change a few things. Remember, we had four people hosting Financial Sins. That's changed, y'all. Man, it's changed, but it's all right. It's all for the better. It's all for the better. You could catch two of our hosts um, doing their own thing right now. All right, they have a phenomenal show. You definitely want to try to look out for them. And Flo is still with us. But she's traveling. She's going to be traveling for the next couple of months. Then it'll be my turn to travel, right? And so we're going to do this thing so that you have a lot to watch and to learn. Okay, so today's going to be a really exceptional day. All right, and let me mention this. One of these days, we're going to have Tanya, who's one of our hosts, and Renetta come back as our guest. So they can tell us what they're doing, right? I know you guys would enjoy that. You love it. And you're gonna, oh man, you would really, really benefit. And you got to catch the show. I don't know the name of it. I think it's just Tanya and Rosetta. All right, but you want to look for it. It's on YouTube and it's on Facebook, so you want to check it out. All right, so today is going to be an exciting day. We're going to talk about mortgages, and we're going to talk about home ownership. How do you get a house? All right, if you're living in an apartment and you want to transition from renting to owning, what do you do? Some people know, some people don't know. All right. So that's really what we're going to talk about today. And I believe you will enjoy our guests. But before we bring our guests on, I want to talk to you about something that's dear to my heart, because as you may or may not know, this is Financial Literacy Month. That's right. All of April is Financial Literacy Month. So what I want you guys to do, I want you to get out your trusty, dusty phone, all right? And I want you to invite somebody. I want you to invite somebody to the show today, okay? Invite them to the show, okay? Invite them. So let me mention this. The topic today is buying a house and what to expect, right? Before we get too far, though, let's talk about financial literacy. As you get older, and I don't know why, and this is going to be a question for my guest, as you get older, a lot of people I have two thoughts in my head here. Sorry. But as I'm seeing people that are in their 60s and 70s buying their second house, their third house, and I'm trying to figure out why. All right, because as you get older, we teach a concept in our industry, in our company, World System Builder, called the X curve factor. And that is simply saying we want you, as you're getting older, you should be accumulating money, but simultaneously getting out of debt. All right. People tend to accumulate a lot of debt in their teens, post teens, or 20s. And my generation, which is back a little bit before Generation X, I don't even know what we're called anymore. But that generation, anyway, we are in our 50s, 60s, 70s, some in their 80s, right? should be getting out of debt, not accumulating debt. So the X curve factor, your debt's coming down, but your money should be going up. So you should be saving money, right? Because average retirement is around 20 years after you retire, for 20 years or 8,000 days. What are you going to do with your 8,000 days? So that's just a financial literacy moment to encourage you to get out of debt. Get out of debt, people. Don't accumulate more debt if you don't have to. Well, we're going to bring our guests on in a moment. We have Hannah Cooper, who is in the financial industry with Fairway. I hope I'm saying that correctly. And Whitney Sweet, who is a realtor. Yes, and her name is really sweet. All right. And she's a realtor with, boy, I forgot which company. It's a familiar, Keller Williams, I believe it is. Is that right, Whitney? All right. So we're going to bring these two ladies on, and let's get right to it. Ladies, welcome.
Hello.
Welcome to Financial Sense. Hey, y'all look good.
Thank you. Thank you.
Yeah, y'all look good. Normally I would bring one person on at a time, but I think this is more interesting. I think it's more interesting. Bring on two people and let's just see where things fall, right? Right? Let's just see where things fall. So we're talking about buying a house and what to expect. Buying a house and what to expect. So now I sold real estate. I sold real estate for 12 years. Well, 10 years actually. I was licensed for 12. All right. And when I sold it, the rates were high. I mean, they were high. Now, people today think the rates are high. I don't even know what they are, but I think some of them may be at 6 or 7% or something like that. Well, add 10% to that, or add 13% or 14% to that. And that's what the market was like when I was selling real estate. Rates were 21, 18, 19, 20, 21%. If you went to the wrong lender, it may have been like 30% because maybe your credit was jacked up from the floor up. And usually that was like with a second mortgage, man, they just rip people off. So ladies, tell us, what is it that people need to do here? What's the first thing? First, do we go to Hannah first or do we go to Whitney first? If I'm interested in getting out of my apartment or I'm living with my parents and I want to get out on my own, what do I do first?
I think you would come to me first. A lot of people don't understand that. They think they go to the agent first sometimes they don't. It's not really, you have to do one thing before the other, but you can't buy a house unless you have the money. So you could go to a realtor first, right? Am I right, Whitney? A lot of people will come to y'all first and say, okay, well, how do I get the money for buying a house?
Right. But some people, lots of people, younger people that I'm dealing with, they don't know the money part of it first. So they're like, hey, I want to buy a house. And then we do a consultation and I tell them, hey, the first thing you need to do is find out how much home you can afford. So then I redirect them out to a lender that I am partnered with.
Right. All right. So the first thing first is find out how much money.
Yeah. How much money
you could actually get. Okay.
Yeah.
All right, so let's talk about that. What goes into that?
So when you're trying to find out how much you qualify for, same kind of process of almost buying a car. So a little bit more in depth, obviously, but basically you fill out an application. You tell me stuff about you, where you currently live, where you're working. You obviously need some kind of income if you're expecting to pay a mortgage. I'll tell you the number one thing not to do. Do not Google it. Do not Google how to buy a house, because
Wow.
it's going to intimidate you, and it's a scary process, and it doesn't have to be. It does not have to be as complicated as Google is going to make it.
All right, hold on a minute. Hold on. Let me stop you for a moment.
Right?
Right.
Are you telling me that people actually Google how to buy a house? I mean, hey, look, I know Google's good for a lot of things, but buying a house, really?
Yeah.
Have you run into that?
Well, we're going to back up a second. When you said that, I think you mentioned in your introduction that it's a little bit before your generation or whatever term you use. This generation Googles everything, literally everything. Hey, I cut my finger. What do I do? Hey, it's a very unique, interesting time where Google and technology is taking over. I'll just put it that way, because you'd be surprised at things that people Google.
Yeah.
Wow.
And granted, Google is correct in some aspects. They legally have to explain so much in depth, and that's not going to pertain to every single person. So you might Google something and they might say, hey, my credit score needs to be a 700. That's not true. Your credit score doesn't have to be exactly a 700 in order to buy a house. Different programs require a different credit score. We can get into that in a little bit, but the first thing you need to do is apply. So tell me where you're working, where you're living. We like to show a 2-year history. That doesn't mean you have to be in that house for 2 years. It just shows me, okay, you lived in this house for 6 months. Where did you live before that? I need to show that you've been living somewhere within the United States, or even outside of the United States if you have some kind of citizenship or something. But you need to show me that you've lived in a residence for 2 years.
Okay.
Same thing. So
go right ahead. I'm sorry.
Same thing with employment. The same thing with employment. You don't need to have the same job for 2 years. And I think that's another misunderstanding is people think, oh, well, I haven't worked at the same company for 2 years. That's not true. You need to show 2 years of steady income. So if I worked at a daycare and I switched and I started working at a bank, that's still 2 years. If there wasn't a gap there, you left a daycare to go work at a bank or somewhere else, you still have 2 years of W-2 based income.
Okay. All right. And is that the main issue? The main issue is the W-2?
No. I mean, obviously you can have other types of income. I've qualified people off of alimony or child support alone, but you have to show the consistency. So it just kind of depends on the borrower and their situation. Everyone has a unique situation. And so I can't say, oh, this will work for someone and not work for the other. So it just kind of depends. But as long as you're showing income, you are bringing money into your account regularly, it's consistent, and it's definitely going to continue for X amount of years, that's qualifiable income.
All right. Yeah, we froze there for a moment. All right. No, that's understandable. You have to have that consistency with the income, knowing where, and the bank needs to know where it's coming from.
Right.
So what type of proof do you show? Like for, let's look at a hairstylist. All right. A lot of them are paid cash.
Correct.
All right. So how would they show proof?
So with hairstylists or other, we call them self-employed borrowers. They have, typically they're paid out at 1099. If you own let's say you own the hair salon, typically you have a business license, obviously, to do such, and you should be creating a 1090 a profit and loss statement for your business when you file taxes, or you file some kind of Schedule C on your tax return. In those situations, if your tax return, if you own a business, let's say I own a hair salon. If I own a hair salon, and I'm filing it under a Schedule C, I'm claiming so much income, but I'm also writing a bunch of stuff off, right? Because I don't want to pay a big check at the end of the year. On your Schedule C, there's a line that says your net profit and your net losses for the year. I would say a good portion of the time, people write so much off that they technically claim a loss at the end of the year.
Okay.
Well, that's a huge problem because to me, you're not making any money.
Right.
So when you're talking about self-employed borrowers, if I'm showing on your Schedule C that you're not making any money, you took a loss for the year, I can't use that as qualifiable income because you wrote so much off. Some people, and that number needs to be divided by 12. So even if it is a positive number, and let's say it's $12,000, that says you only make $1,000 for the year. That means you can't purchase a $2,000 mortgage.
Yeah. So if they're writing off a lot, then forget it. I mean, if I mean, not writing off a lot, but if they're in a negative, you know, they don't have any type of the profit's not showing.
The profit's on that. Now, granted, there are ways around it, and that's why you need to go speak to a mortgage lender at that point, because there are different programs like bank statement loans and stuff that are made to benefit self-employed borrowers. But I wouldn't even get into that unless you're self-employed, and I would take it straight to a mortgage lender because they're going to tell you what you need to do and what documents that you're going to need, because that is completely depending on the type of services that gets really messy. So I definitely recommend speaking to a lender in that aspect because there are ways around it, but everybody's going to be different.
Okay. So there's ways around it. So they really just need to speak with a professional before they get too excited.
Especially if they're self-employed. Correct.
All right. So they should come and see you first before they go see Whitney. Because Whitney's the realtor.
Correct. Whitney would need a pre-approval letter from someone in my profession when she puts in offers. Typically, not always, but usually they do, especially in our market that we've seen recently.
All right. Yeah. When I got out of real estate, the approval letters were just really coming out. I mean, pretty much everything was word of mouth or by the phone. Yeah, I could call the bank and say, and I knew who the underwriters were. So I said, look, do they approve? How much are they approved for? You know, are they approved? You know, how much and so we didn't have approval letters per se. All right. And so it was a little different. And like you said, there's a lot. I mean, a lot or there's ways around everything for the most part, and legitimate ways too. So Whitney, when someone comes to see you, what's one of the first things that you need to speak with them about?
In my buyer's consultations, I just talk about the home buying process and how everything works. Like she said, typically you would speak to a lender first, but lots of first-time home buyers do not know that. So that's where I come in and I do a 15 to 25-minute buyer's consultation, find out what they're looking for, and kind of just giving them just the basis, because that financial part of it is going to be the main piece. How much home you can afford is always what I stress. So they do come to talk to me first, but we can't get anything done unless they're a cash buyer. We can't get anything done until they speak with the lender.
Do you run into a lot of cash buyers? Or do you run into them occasionally? Do you run into them, period?
Occasionally I do. And they're more so investors. So they're looking at different price points. I've helped a couple investors buy to kind of flip or do Airbnb, short-term rentals, things like that. So unless you have a ton of cash, you're going to need to speak to a lender.
Wow, unless you have a ton of cash, you're going to speak. All right, so now, when I was in real estate, there were things where you could put down, say, 25%, 30%, something like that, and there'd be no credit check. Do they still have things like that today?
No, you are
No.
required. No, you have got to have a credit pulled. And
Okay.
that's another big thing that scares, I think, people away or keeps people from taking that next step. They're expecting that they think that their credit being pulled is going to affect their credit by a traumatic amount. They're like, oh, don't touch my credit. I don't want it to decrease. Your credit is not going to take a huge decrease by just pulling credit. It might take a huge hit if 500 companies are trying to pull your credit within a year. But if you, every once in a while, just if you are trying to apply for a loan and you need to have your credit pulled, you have a small, like I would say about 60-day window where you can have as many people pull your credit for a mortgage as you need. If you're trying to shop around, you have 60 days to have people pull your credit and evaluate it without it taking a huge hit to your credit.
You have 60 days. Explain that. What 60 days for what?
For someone to pull your credit, for like if you're shopping around and you want to look at what different mortgage companies have different options, 60 days for them to pull your credit without it taking a huge hit. It will still show on your credit, but it's a 60-day window. Like, hey, they were actively shopping, not, oh, he tried to buy a house here, didn't work. So now he's trying to buy a house again. Oh, that didn't work. Now he's trying to buy a house again. That will affect your credit a lot if you're doing that in like 6 months apart. But if you have 60 days and you're actively looking, then it doesn't affect your credit as much.
Okay. So within that 60-day period, let me make sure I understand what you're saying. Within that 60-day period, you could, are you applying for houses or you're just looking around?
You would be applying with different lenders.
Okay.
To see how much you qualify for.
Okay.
Because what Whitney is going to need is she's going to need to know what kind of price range we're looking at. And you're not going to know what kind of price range you're looking at until you apply with a lender to qualify. And in order to get a fixed number on how much you qualify for, that lender is going to need to pull a credit report. And they can't use somebody else's credit report. They have to pull it physically themselves.
Oh, all right. They cannot use another company's credit report is what you're saying.
Correct.
All right. They have to physically pull it. Okay. All right. All right. I'm with you. So now we're not pulling, or they're going to have to pull, in other words, their own credit report. So if you go to, say, 3 different lenders within 60 days, it's not damaging your credit?
Correct. Correct.
Okay. As much. Okay.
As much. It might have a little bit of effect, but it's not going to be dramatic increments of difference at all.
Okay. Okay. All right. I think that's significant. That's important for people to understand because people get kind of afraid. They don't know what to do. And that's one of the reasons why I want. When it's really windy out there. Okay, we're back. All right, now Whitney, when somebody's with you, and after you've done your initial interview, like how would your interview go for the most part?
How would I interview go? Was that?
Yeah, how would your interview? What would you say in your initial interview? I want to buy a house, and I come to see you. What are you going to ask me?
They say, I don't know where to start. And I said, well, you're making a good start because, you know, it's a goal that you're wanting to achieve. You did the right thing by contacting me first. And then I explain the process, like I said. Sometimes they say they'll give me a rundown. Oh, you know, I had this happen to my credit or I had that happen to my credit. So I work with lenders and I just ask Hannah if she offers to, if they aren't ready, if they know they're like 3 to 6 months out, once she runs the credit, she tells them, hey, if you pay this down, you can get pre-qualify for this much, or just different things to work on if they aren't ready at the time. Because that just doesn't, I don't want people when they reach out to me to feel that pressure. You got to be ready right now. It's more so
Mhm.
about helping you achieve that goal. So I'm going to tell you all the things you need to do to start the home buying process, and then back to Hannah again, if they aren't ready, what things they can do to work on their credit to be able to apply for that loan, will qualify for that loan to get
Okay.
pre-approved.
All right. All right. All right. Hold on one moment. All right. All right. All right. All right. So, all right. Now, I'm going to put out your information, and as soon as I figure out what to do here, I think I lost what I was working on. Let me see here. Yeah, I sure did. I sure did. I'm gonna type it in there so people could know where to call. But let me ask you something, Whitney. When someone is meeting with you, have you ever had a situation where someone meets with you and then you tell them, "Oh, there's nothing I can do to help you"?
No, because
Okay.
that's not, I guess, I don't do that. I'm not going to bash another realtor, but if they aren't ready right now, I want them to know the things that they can do to be ready. Or even if I just shut them down, that's not going to be good on my reputation, because they're going to say, well, she wasn't even willing to help me. So I take more pride in my name being a brand that, well, I wasn't ready at the time, but Whitney, go see Whitney because she told me all the things that I need to do. So it's more, so I'm in this business to build relationships, not just, oh, you got to be ready right now to give me a call. That's not what I'm in the line of business to do. I don't want anybody to
Right.
just be discouraged. This is one of the biggest investments that people are going to make probably in their whole life.
Yeah, absolutely. Absolutely. I agree with that. This is a major, major investment, and a lot of people aren't prepared. Now, ladies, I'm going to tell you what I'd like to do. We're going to discuss a lot of things today, but then in around, I forget when, I think it's October. I think it's either September. I think September is another big month. Well, let me ask you, what are the big buying months?
The first quarter, normally January through, well, the holidays. So from about
Hmm.
November to February, March, it slows down and then it picks back up in the spring, because lots of buyers that are ready are looking for their kids to be finished with school. So school is
Hmm.
over in May here. So people
Hmm.
who are relocating to come down, my busier months are from May, because they're no, not May, starting about in March all the way
Hmm.
out to the summer. So from about March to August is pretty busy.
March to August. Okay. All right. So I tell you what, my busiest months was about the same, but it went maybe a little further, March to September, right around in there, right around February. My activity started picking up a little bit towards the middle to end of February. And then when spring hit, it just went crazy. It just went crazy. Then summer, people like to go on vacation, of course, but I still had some really good activity then. All right, now let's talk about designations. We're going to come back to what people need to do, because I met Hannah. I met Hannah at an open house.
Yep.
She was with a young lady, and they were just so professional. I
Mhm.
said, "Man, that's the type of person I need on this show. Somebody that has that professionalism." I met Whitney. She was leaving a Dollar General. I was coming in, and she was just dressed like a professional. I had her name back, and so I was like, "Yeah, look at these folks." I really wanted to get Whitney into my business. That's what I really wanted to do. I was like, "Man, wow!" So I said, "I need these professional ladies on this show to help me talk about money and what people need to do." I talk to a lot of people, and I have a lot of people that still ask me questions about real estate because I sold it for so long. Now I'm in insurance or finances. I help people with retirement plans. I help people with budgeting. I help people. I don't really help people get their credit squared away, but yet I do. You know, I'm not a credit repair person, but I can help them. I can give them some direction on things they need to do. You know, pull that credit report, and then I can show them things on there that they need to focus on and really work on, and I can help them get some areas in their finances in order. So when I ran into you ladies, I was like, man, these ladies are like 5 stars. You know, I need, you know, like a 5-star hotel. I need to get them on the show so they can talk about what people need to do. Because I've run into a ton of people that think the apartment life is the way to go. Now, nothing wrong with renting an apartment.
Nope.
Nothing at all. You know, you could avoid the lawn care. In most cases, you're going to avoid the maintenance, right? But it is nothing like ownership. There is nothing like ownership. You know, so tell me, Hannah, tell us about your qualifications, designations that makes you capable to do this job that you're doing. And how long have you been doing this?
So let me start off by saying I might look professional and everything. I can't speak for Whitney, but I'm still human. I'm not perfect. And I think a lot of people, when they come through this process, they get intimidated. They feel like they have to have all of their ducks in a row. And we're human. I've made my financial mistakes. Believe me, I was not perfect. And I got into this field solely for the purpose that when I bought my very first home, it was the worst experience ever. And it was just lack of communication. I wasn't educated through the process. And I just wanted buyers, especially like I was back then, to experience and understand what they were getting themselves into. Because it can be intimidating. It doesn't need to be, but if you do have someone that's just really not communicating and you get, because you will at some point get 80 documents to sign and you feel like you're signing all this stuff, but you don't even know what you're signing for, that's not a good step. You need to know what you're signing. So I've been in this mortgage business. Obviously, I started out as an assistant and progressed into a loan officer, but I've been in this field for going on 3 years now, a little bit more than 3 years. Okay. I did take my real estate course actually before I got into mortgage. I just never signed with a mortgage company. I had my children very young, so I could not work off a commission. And I was like, well, we're just going to revisit this. So now I'm obviously in a different chapter of my life. And here we are doing mortgages. But all you need to qualify for a mortgage to be you need to show steady income. You need to show residency. You need to show all of these things. But like Whitney said, it's not a matter of, oh, you're not buying a house. It's a matter of when you're buying a house. It might not be this month. It might not be next month. But we can get you there. And it's just a matter of me and Whitney working as a team to get you there. I can't tell you how many people I've told that says, okay, we're not where we need to be yet, but let's work on these steps. Let's get you there. And I think holding their hands, like I follow up with my clients that are still in the process a few months later. And I think it's a matter of holding their hands, walking them through the steps and getting them to where they want to be. If they want to buy a house and buying the house is the ultimate goal, what are some things that we can adjust? Can we go down on purchase price, or are you set on having this amount of home? If you're set on having this amount of home, then we're probably going to have to wait an extra year before we get there. But we will get there at some point.
All right. Wow. That's awesome. And now, when I was in real estate, I was a realtor. I took the test to be a broker, messed up. There was in 2 parts. I was in Connecticut. So I took the test twice. I passed one part, failed the other. The second time I took it, I failed the one that I passed the first time and passed the one that I failed. And I said, well, can I just put them to the? They said, no. They said, the way you have to do it, you could take one part and focus on that, and then take the other part. But if you take both parts together, then you got to pass both parts at the same time. And I was like, what? You've got to be joking me. So after that second attempt, I gave up. Now that was back in 89, 90, in that range, somewhere back there. So did I see you say, wow, Whitney, with your mouth? Did I see you say, wow? Wow. Okay. Yeah, it's all right to say wow. So yeah, it was a while ago. And it was good. You know, it was good. I did not get my GRI designation or anything like that, but so Whitney, tell us about yourself. How long have you been doing this?
My first job out of college, I graduated the University of South Carolina with my bachelor's in business administration. And my first job was an real estate agency. So I was just sitting there. This was back in 2017. I get bored really easy. I'm always looking for different things to do. So as the agents would be coming to me and they were explaining the things that they were going through, I was inputting their paperwork. I was just doing all the paperwork and stuff like that. So one day I was having a conversation with my husband, and I was just like, I'm just really bored. I'm just sitting here. And he's like, well, he's like, do you see a realtor? I think that you could do that because you're sitting here and, you know, you're in this field basically without being out in the field. So I said, yeah, that's interesting. I was talking to another agent, and he's like, yeah, you got to have personality. You have a great personality to do so. So I'm just kind of like, whatever to both of them. Like, I'm here behind the desk. I like what I do. Before being in real estate, I did banking. So it's like in admin and paperwork kind of things. That's what I like to do. But thinking to myself, and I'm like, well, okay, I'll take a stab at it. So fast forward a year and a half, I took a crash course, and I'm just taking it so that I'll be able to do more to support my agents. And I ended up really liking it. So I started off being licensed in South Carolina. We then relocated to Georgia. So I have been licensed combined for about 4 years, but practicing in Georgia for 2 years. But I have partners throughout the US. So I work with people all over. Back to what you guys said, I think, Anthony, you mentioned, if people aren't ready, do you just say, no, I don't work with you? I like to compare myself to Chick-fil-A. I take pride in, I want to be like Chick-fil-A. My pleasure. How can I help you? I don't want to be McDonald's. So it's like, if you aren't ready, what can we do to get you to be ready? So when it's not just Whitney Sweet, the realtor, I look at myself as a brand. Like I said, I'm in the business to build relationships. I'm not just here to get, it's nice to get the pay at the end, but it's nicer that someone will refer me to a family or a friend. It's nicer to follow Sally, who was pregnant, and now they bought their first home. She's pregnant again, so she needs to upsize. Things happen. People need to downsize. I know you said that you're more so talking to people out of getting financially free in their later 60s. Some people want to retire by the beach at Tybee, so I'm not gonna. I don't think we would agree on those two things, because some people want to retire. We are taught that people buy from 3 to 4 times in their life. So you have your first time home buyer, life things happen. You have children, you want to upsize your home. Your children graduate, you want to downsize maybe, and then maybe you want a retirement home. So there's going to be lots of people buy more than one time. So if I'm doing an A+ experience that first time around and following up with them, not just because I got you to the closing table, but like I said, building relationships, I want to be a part of all 4 stages of that.
All right. So yeah, I run into a lot of people. That buy, retirement homes. Hold on one moment. Someone's trying to let me just let them know. There we go. I run into a lot of people that buy retirement homes, and they're in their 60s, their 70s, and I understand that. But I've run into a lot of people that that they're in the 60s and 70s, and they're not buying a retirement home. They're buying a huge house. Huge. They're buying something big. And I'm like, really? Why would you want to buy something that big? But that's what they're doing.
Now, my question to you would be, do you know if they're using that as a primary residence or not? Because the real estate has many different parts as far as investing and things like that go too.
Yeah. But you know what? What I would do if I bought something like that, because I tell you what, I've actually been thinking about buying another house. So I might have to come see you ladies, right?
Yeah, please.
And today, what is that thing called? People, they can rent their house out for like a week or a weekend or
Airbnb. That's when I just spoke on investing. So they do short-term vacation rentals. You need a certificate in place, so you can do have an STVR or you can do Airbnb. And that's a business within itself. So it's always good to do your due diligence, as that would be another business that you would be having. You're already an entrepreneur, so you would just need to do more research on either one to see which one is a better fit for you.
Okay. Yeah. So,
but I can help you find the house.
Say that again.
I said, but I definitely can help you find the house and hand it
all right
for that.
All right. So what other things, ladies, do we need to talk about that people need to hear when it comes to buying a house, transitioning, or even you brought up something, Whitney, about retirement homes. What is it that people need to consider if they're going to keep their, do you find that people's going to keep their first house or their primary home and then get a retirement home in addition to that?
Okay, so we live in the South, and in the summer, lots of people come here for the beach. So I love being here. I'm a native of Hilton Head. I love the beach. So what I'm seeing is lots of people want to come down to enjoy that, but they're Northerners. So it gets hot in the summer. It gets hot here, so they want to go back home. So they're doing, like I said, Airbnb or short-term vacation rentals because they only want to be here for the summer months when it's hot and enjoy the beach. But then once it's colder, they want to go back up north, or vice versa. Some people want to get away from the cold, and some people want to go back to it because they miss the snow or various reasons. So everybody's different.
All right. So what else would you say about mortgages, Hannah?
So I want to actually say two things. One, the amount of people that keep their first house that they purchase, their first mortgage, is very small. Very small. Most people will refinance at some point or outgrow their current home or change careers, or they're buying. It is a very small percentage of people that actually keep the very first mortgage that they have. Even if they keep that house, that house and buy another one as an investment or something, chances of them refinancing that home is very high, which leads me into my next thing is everyone wants to base everything off of an interest rate. And that is completely understandable because that is a portion of your payment and you don't want to pay a high portion. But you can refinance. Refinancing is going to happen at some point. Like I just said, you're going to need to refinance.
All right.
Most of the people I'm dealing with right now think that we're going to see 2% again because it was like that 2 years ago. We had a pandemic. A lot has happened in our economy that we did not expect and not plan before, the chances of us seeing 2% again are very, very small. And
Hmm.
they feel like because we saw them for a full year, that might be the new normal. And it's not
Okay.
exactly true.
All right. All right. So what are the rates now?
It just depends. A lot of people would say a conventional, if you're putting more down, your interest rate would be lower. That's not true. Right now, we're seeing a lot of government loans like FHA, VA, USDA, all of those kinds of loans where you're actually putting less down, have a lower interest rate. So it just depends. I would average between maybe 6.5 to 7.5, depending. Obviously, your credit score and all of those things are going to affect your credit. How
All right.
much debt you have versus how much money you make,
All
that's
right.
going to affect your interest rate. All of those things affect your interest rate.
Okay. All right. Hold on a minute. I was listening to something you said.
Mm-hmm.
We're not going to go back down to that 2%. The rates right now are all over the place.
Mm-hmm.
The highest you've seen right now is what?
I've seen in the 8s, but that's only because if someone's trying to buy an investment property or something, some of those interest rates can be higher.
Mhm.
They could have really bad credit. It's really hard to justify what interest rates you're going to have unless you have your credit pulled and your income ran.
All right. All right. So the credit is going to make the difference for the interest rate.
Your credit and your income. We call it DTI. It's your
All
debt
right.
to income. How much money you owe versus how much money you make. So
Okay.
if you're making $2,000 a month and you're paying $1,000 in bills every month, that's a high debt to income. Not to mention, we have to add on what your projected mortgage is going to make. That's going to affect, you're at a higher risk at that point. So that's going to affect your interest rate because you're more risky. You have a lot of debt that you're going to have to pay. It's not going to have as an appetizing interest rate.
Okay. All right. Now, what is USDA? That sounds almost like I'm buying some beef or something. What is USDA?
USDA is a loan program that is eligible to certain borrowers, and you can look it up on the USDA website.gov. But it is a certain loan program that is provided by the government where you can put in the state of Georgia, where you can put as little to no money down. It has very strict DTI percentages that you have to follow. You cannot make too much money, and only certain areas qualify for that loan. So if you're trying to buy a house in the middle of the city of Savannah, you're not going to qualify for USDA. They're more geared towards rural areas. So really surrounding areas that are less populated. But you can look up the map that's eligible. You can actually, even on that USDA.gov website, you can even type in your income and like your household information to get an idea if you qualify for it.
All right. Now, that's a government program?
It is a government-based loan, yes.
All right. So what's the... And you could do that pretty much with... Is this... Let me say like this. Is this just for first-time homeowners?
It has to be your primary residence.
No, is it for first-time home or first-time buyers?
Not necessarily.
Okay.
It can be your second home. I mean, not second home. It can be your second time buying a home. But it's mostly geared towards like low income based
All right.
people that are just trying to buy their first home.
Okay. All right. All right. All right. So what other type of... Now, I used to deal a lot. I never heard of USDA. I don't know. Maybe something.
It's not very popular. The requirements to qualify for it can be kind of tough. It's always an option I look at for people if they don't have a lot of money to put down on a home. It's always something I look into just to be safe. But like I said, it's not a super popular loan program.
Okay.
But if
Okay.
you can qualify for it, it's the way to go.
Wow. All right. Now, what other type of mortgages are out there, say for the low income person?
My favorite loan program is an FHA loan.
Okay.
Solely recommend it for multiple reasons. You need less money down. You only require 3.5% down.
All right.
It requires a lower credit score. We can qualify FHA for Fairway. Every lender could be different, but Fairway requires a credit score of a 580 for FHA. Also, depending on the borrower, you could have a 580 credit score, but your debt to income or your credit history could be kind of wonky, so they might want it a little bit higher. So just keep that in mind. When people say 580, just know that, okay, if I have a bunch of late payments, they might want my credit to be more towards 600. So it just kind of depends on the borrower. That's why we ask to fill out an application so we can look at it. But a minimum credit score of 580, they only need 3.5% down. And because it's FHA is a government loan, the interest rates are a little bit lower. So it's my favorite one. A lot of people steer away from it because they do have insurance that is put onto it called MI.
You're talking about FHA?
Yes, FHA.
Okay. All right.
And that insurance is on that mortgage for the life of the loan, but that's when you come into account with you're gonna refinance at some point. Once you refinance, that insurance can be dropped off.
All right. Now, you're with Fairway Mortgage Company?
Fairway Independent Mortgage Corporation.
Okay, Fairway Independent. I just want to make sure I'm trying to tell the people independent.
Independent Mortgage Corporation.
I'm abbreviate things a little bit. All right, now let me ask you something, Miss Whitney. How do you deal with people? Have you had to deal with people that, because I ran into this now selling mortgages. They really didn't qualify for a house. I tried programs like Hannah was saying. We just couldn't get them. So I had to help them find a good apartment. Have you ever had a situation like that? Or what do you do if you tried everything to help them get a house and nothing happened? Well, see, you're different. You are probably more polished than I ever was when I was in real estate. Oh. And there's so much available today that you may have more options than I did back then. All right. FHA has been around for a long time. I had FHA. And hey, listen, this is one thing that people better realize. After so many years of having FHA, you could go back to your bank. And after that, I forget how many years the requirement is now. And tell them to take that off because you don't need it anymore. You know what the time?
So that's no longer the case. If you're gonna put if you're gonna put 3.5% down, you have to refinance the home in order to get that taken off.
All right.
If you do put 10% down, it does fall off after 11 years.
After 11 years. Okay.
You are required to put 10% down in that case.
Okay. All right. Wow. All right. So we're learning something today. So let's go back. Let's go back to Whitney for a moment because we're running out of time here. Talk to me, Whitney. I'm looking for a house. Do you ever deal with, well, are you licensed to sell in more than one state?
I am. So I'm licensed in South Carolina and Georgia. Those are the two states that I actively working, but I can help someone in just about any state, because if I can't, I know I have a friend that's in that state or something. So like I said, my business works heavily on referrals and word of
Mhm.
mouth. That's like my number one thing. I tell everybody what I do. That's my sphere of influence. People won't know to use you if they don't know what you do. So I
Mhm.
practice that heavily. Back to what Hannah was saying, when she's getting into all these different loan types and things, FHA, conventional, that I tell people straight up front, I don't know everything and I don't pretend to know everything, because I don't, the worst thing I want you to do is say, well, Whitney said X, Y, and Z. Then they go speak to Hannah and it was off 5% or something
Uh-oh.
along those lines. So I want to emphasize that the team that you are working with is very important. So to buy in real estate, you need to get pre-approved. You meet with an agent who's going to help you find the house. That agent then is going to probably refer you out. Some people waive the home inspection, but I would strongly suggest you do that unless you're an investor and you know you got a ton of work to do. The lenders have built-in appraisers, because we got to make sure that this house appraises for the amount that we are under contract, and that can be a whole nother deal within itself. As you said, we're running out of time, but that's also an important piece. And then the attorney, last but not least, who's going to make sure that this thing brings it all together and you lease your new home. So the team that you work with is very important. Even if you don't want to work with me, I understand, you know, personalities are a thing, but I hope that I can help you buy a home. And I take pride in the people that I work with who I know can get the job done, because Hannah probably has experience. You might have a closing date of May that gets pushed back out to June or July for whatever reason, which we have been in the sales market, so you weren't seeing that kind of thing. But there's so many different moving parts in real estate, and I want to make the process as easy as possible every chance that I get. It doesn't
Wow.
always happen that way, but that's my motto.
Yeah. And how long did you say you've been in real estate?
I have been practicing in Georgia for 2 years. I started in 2017 as an admin, so about 6 years.
Awesome. Awesome. Hannah, I didn't mean to cut you off. Go right ahead.
No, I completely agree with Whitney. The communication is key. And if you don't have a team that's willing to communicate, it's almost like a divided household. When
All right.
when that's being all messy and stuff, it's not fun to deal with. And so if you have an agent and a lender that are not communicating and the borrower is having to be the mediator, then that's just stressful on the borrower. And that's not something we want to produce. So communication is very important. And if the whole team that you're working with is not communicating thoroughly, like there's a lot of behind the scenes things that me and Whitney would do during the transaction period. And if we're not communicating through that, it's going to make it more stressful for the person buying a home. And it doesn't need to be, because they don't know what we're asking them 90% of the time. So I agree 100%. Communication is very important. And if you feel like you're having to be a mediator between your lender and your realtor, you might want to regroup.
Yeah.
Right. Hey, folks, I hope that you got a lot out of this. We're going to have to bring them back. I have so many more questions. I'm serious. I have a whole bunch of questions, you know, but we don't have the time. We don't have the time. We're out of time. Hey, listen, I want to say thank you, ladies, for coming on today. I hope that you enjoyed yourself. I hope that you had a good experience. And I want to bring you back. But would you come back?
Yes.
Yes.
Awesome. I hope, folks, that you will reach out to these two ladies. And if you have questions, their names and numbers are scrolling on the bottom. All right, you see Hannah right there, Fairway Independent Mortgage Corporation. You see her number, 912-271-4922. Did I get it right, Hannah?
Yes, that is correct.
All right. And then we have Whitney right there, Whitney Sweet with Keller Williams Realtor. She's a Keller Williams Realtor. Her number is 843-415-3404. Did I nail it, Whitney? Is that correct? All right. Well, listen, folks, I want to say thank you. And once again, ladies, it was a pleasure having you. It was a pleasure having you. Thank you so much. We will see you next time. I got to close out in a minute. So we'll talk to you. Stay on. Don't go anywhere, and I'll be right back. Hey, folks, thank you for being with us. We got to get out of here. But I want to thank you guys for being with us. And I want you to spread the word. We're going to show this again later on. So please take a look at things and spread the word. Let people know we're going to be coming back. We're going to be coming back. All right. We'll talk to you later.
I like that.